Hey, what's happening, guys? Dan Dario here with another Options and Play video update. Oh, is everybody excited for the Fed meeting today? I know I am. If for no other reason than just to get it past us so we can focus on trading again, because it seems like FOMC rate decision and the language this week is just kind of holding the market hostage, right? I mean, today specifically, just in an ultra tight range, light volume. Seems like everybody's like just in the waiting game. So be happy to get an update on that front, and then to have it past us, and then we can focus on market moving again, and then the G20 next week. So what I'm going to talk about in today's video, actually something we went over a little bit during Monday's option session when we got together. So I threw the GLD, the gold, into like my percolating playbook, and uh, I'll tell you what that means. I mean, it's kind of like a funny way to describe it, but um, really this year, and even more recently, obviously there's been a pretty strong demand for like protection, right? Yield-oriented assets, defensive plays, right? A lot of people have been raising cash. Just read an article just like the last 2 days saying that investors have turned the most bearish since 2008. So cash, people are hoarding cash. People are plowing money into treasuries, right? People are putting money into utilities, REITs, which are both at or near the 52-week highs. So just it's defensive yield positioning has been a hallmark of performance this year. Even when the market was like cruising higher, it seems like they were still really performing pretty well. Um, what I say is like kind of lost in the shuffle is gold. I'm not going to get into silver because it's a little bit different performance, but gold. I mean, quietly having a pretty nice year-to-date move, right? I mean, it's up about 10% since the beginning of January, and even a little bit more impressive is just in the month of June, right? It's really taken off running. And you look at the chart and you're like, oh, that's nice. I mean, like, what's the big deal, right? It's like, okay, it's kind of up near like the top of like last year resistance. Seems almost like Treasuries, like up until a couple months ago, right? I mean, pretty well defined range, not a whole lot to really look at, right? It's had like a nice move off the low, but this is to me when it gets interesting. This is why I say it's percolating, right? So you can see if I go back a little bit longer, right? So this is the weekly chart. You'll see what I mean. So look at this setup that's forming right here, right? Really nice move that's put it up right at the top of like this channel resistance, right? So this is a 5 to 6 year resistance level that it's pushing up into the top of. And kind of quietly, I mean, gold bugs are always there, right? But gold for the most part hasn't had like that really strong, retail interest. Like treasuries this year, I feel like most people probably weren't, you know, too interested. Most traders probably weren't too interested in treasuries on a day-to-day basis. But the treasuries just started rocking and rolling this year. Then all of a sudden, everybody's opinion, right? I feel like this is kind of the position that gold's in. Prior to that, it's like, the people that are always focused on gold are probably staring at this, but the people that really don't look at this on a day-to-day basis probably aren't recognizing how powerful of a setup this could be. I mean, it wouldn't take a whole lot, right? Like if this starts to just tick up through like this area. So what I was saying, or what we were talking about on Monday, was like the 128.50 to 129 area. So once it starts to get up through like the top of this and start to like work on a potential higher high versus 2018, so that's kind of like the trigger point when it puts in a higher high out through the this type of pattern. That's usually when the trigger hits and the momentum should begin to accelerate. So that's why I was saying 128.50 to 129. It's obviously not there. I mean, right now it's about 127. After today, it might either be up a dollar or down a dollar from here. But overall, I mean, like this is something that I really feel like it's just uh, huge potential if this starts to go, because this is a 5 to 6 year move that would it would be a 5 to 6 year pent up move. And when I talk about these setups, obviously, there's option point of view or option perspective, and I find that when you have moves like this, right, where it's like a multi-year breakout or breakdown, if it was on the opposite side, it seems that the options can oftentimes underprice the potential, right? Because the options are priced based off the implied volatility or like the average trading range over like the stock, over like the previous 30 days, 60 days, whatever it is, right? So like they basically price options, not on the developing potential, but basically like how, what has it done prior, right? What's the average trading range? What's the average implied volatility? So like the options price going forward are like that. So when you have like these monster channels that are about to resolve, it's actually presents really interesting like scenario for options, because I feel like a lot of times, like I was just saying, like they can be underpriced, really compared to the potential move, right? So again, with the caveat that this isn't quite there yet, it's still percolating, right? It's getting close, but it's not quite there. But 128.50 to 129. I mean, right now I'm looking at the August options, right? And the 129 to one, so the 129 August strike call is like $1.75 to $1.80 in that range. The 130 strike call is $1.45 to $1.50 range. But you figure a 10% measured move, right? Which really isn't too unrealistic out of like a 5 to 6 year top, right? So a 10% measured move carries this almost up into 140, and options that are like 2 months out, really, right? 2 months out, only pricing in, between like a dollar 70, $1.80, $1.40, $1.50 in that range, right? So like that's why I'm saying, like, it's really worth keeping an eye on these types of setups. You don't have to like anticipate. You can almost like wait for it to like get to 128, 129, even 130, right? Because it really like would trigger through like the high from 2018. But that's why it's worth keeping an eye on these, because I feel that the options can oftentimes be mispriced. So I put that on people's radar on Monday. We talked about it for a little while, but I feel like it's good to like kind of get eyeballs on it, just because I feel like it's like a really good setup, and it's taken so long to develop, that once it starts to go, it could really be a substantial move. All right. So let me know what you think. All you gold bugs out there, I'm sure you have an opinion, so I'd love to hear your thoughts on it. Um, Otherwise, yeah, Fed Day today, and then G20 next week. So going to wrap up June with a couple pretty significant overall market catalysts, and then earnings season's going to be here before you know it. All right. So have a great night, and I'll talk to you guys all tomorrow.